Morning all, how are we doing? Morning Novelty, Yotko, Kennelly, Danny, Gregos, Ian, Amy, Peter Faginia, Shep, Cat, Martin, Christian, how are we doing? Be very careful with that name, don't I? Right, morning Frank, let's have a look at the news. So a little bit of banked profit this morning. Euro yen. So target was propulsion gap top, which is basically that resistance or support. So hit that, bounced off, out, done, 0.3% banked. So it's quite good this morning. I've got two more yen pairs, same exposure, no more positions taken so far, no RSI extensions. It's just dead at the minute. We're getting movement intraday. We had three or four ADRs hit yesterday, but it's literally just that sort of movement. It's not really going anywhere at the moment in the market. We're waiting for these interest rates. I think we can't really make our mind up which way we want to go, so nothing's really going anywhere. So no new entries. Euro pound still in. One position on. Got into it last week. It's 4 days ago now. It's literally just ground down. Haven't managed to even get a second position on it. It hasn't even moved far enough to get a second position. That's an ADR. Didn't get the reversal alert this morning there. I presume the spread was too big. It was too close. What's that? 37. That's an ADR. The spread must have been big on it. Didn't get a second position on it this morning. So yeah, just the one on that at the moment, just waiting. I might actually take one on that. How far away are we now? Let's have a look. 30. I'm just going to take a manual on it. So that'd be 0. Maths. It's too early to do maths, isn't it? 0.26. That's exactly what I was going to put in. I was like, am I sure? So just taking a manual on that. Just TP up to that height. Yeah, euro pound just ground down for 4 days, basically, not really gone anywhere. And the other two I got on the pound yen, sideways 4 days, and US dollar yen. That got into profit this morning. Not enough really for me to take off. It got to break even basically the day after on that news event on Friday, the day after the second entry. And then we got into break even again yesterday, slight into profit this morning, and it's pulling back. But I'm looking for it to come and retest this weekly high, which has already been tested once. We've got these two nice big propulsion. Well, it's actually, that's a gap, but we got this big propulsion gap and the gap, proper gap down there as potential targets. So I think there's a good chance we're going to get down to there and pull back. I think the yen is going to power up. So I think we'll probably find out on Thursday when we get the CPI figures, because the US dollar is either going to rally or dump, and then obviously I'll deal with it as necessary. So today there's no news. We've had the retail sales for the Aussie overnight, which came out as positive. The Swiss franc foreign currency reserves are about to be released. Woo! But as you can see by the ADRs, there's nothing hit ADR, and there's no RSI extensions. There we go. Forex analyzed. Same as yesterday, basically. There isn't anything. DAX. We had a nice clean break yesterday. It's a bit of a whippy open for the first hour in the DAX yesterday. And the same for the FTSE. But luckily, we got the initial cash balance break to target. So banked nicely on that yesterday. We'll see where we go. There's no real... we had a massive rally at the end of the day. All indices yesterday pushed massively, well over ADR. So is this a pullback on a down leg, profit take, or are we turning back into a bull run? Still no clues from the US dollar, but or the euro really. So we'll wait and see what happens. But today, because it was such a big day yesterday, so ADR is 176. We put in a 275 yesterday on the DAX. So 150, 175 ADR day. So we've tapped straight up into this resistance there. So this high, we've triple topped that. We hit that, stalled at it yesterday. So if we hit that again today, there's a good chance of an M pattern reversal down, and then we'll come back down and retest that previous day's high. So this propulsion gap is your downside target. Same with the FTSE, propulsion gap, downside target, upside M pattern reversal. Or we'll break that high and we'll be heading up to weekly highs, which is all the way up there. No trade on either this morning. There we go. So no trade on the pre-markets this morning. Ranges are too small. So 140, 14 points on the DAX. Minimum I need is 176, which is 10% of ADR. 51 on the FTSE. Minimum is 66. So no trades on pre-market range today. They're too tight. So I will be waiting for the 5-minute range to form. And then the EA will take a break of the 5-minute ranges this morning. So we'll see where we go. Broken short, though, at the moment. Morning, everybody else. Themba, Mumo, Baggy, Ivan, Pound Yen. So I'm in Pound Yen short at the moment. Waiting for pullback on that. It's very orderly, this move. So there's this propulsion gap all the way to the downside there. Other than that, we've got that propulsion gap there, which is this resistance. So one or two things is going to play out. We're either going to get bounce off of this propulsion move and then a continuation, or we're going to dump through and come and retest this area. So Bailey is speaking at 2 o'clock tomorrow, 2:15. So that's your first news catalyst for the pound yen is going to be Bailey tomorrow afternoon. So we're waiting to see what Bailey says. If he's bullish as to dropping interest rates faster than forecast, will come down. If he's bearish in the fact that interest rates are going to be data driven and inflation is still stubborn, we'll probably rally. So we're waiting for Bailey, basically. If he says nothing at all of any impact whatsoever, we won't do anything, will we? So, but yeah, just stuck sideways. So look, nice mean reversion, but 3 days sideways so far. So we'll see if we get any movement on it today. Yen's been very stubborn. We had that weak run when we opened in January, but since then, already gone anywhere. If you're trading with the ORB, you will have taken the 15-minute break regardless. So you would have had a nice target hit on that. So that's your 15-minute pre-market. FTSE's not really gone anywhere, but the DAX, you'd have hit target on that to the downside. But we're breaking short. See where we go. Got 1 minute 55. This might be a quite short session this morning because there's literally nothing to talk about. If you've got any pairs you want to look at, let me know. But I mean, the chart tells the story, doesn't it? Really, we're just sideways. A lot of intraday volatility, which is good for ADR reversals. So all the ADR reversals we've had this week have all played out nicely. So if you have been trading ADR reversals, done pretty well over the last week. But as you can see, everything's kind of either grinding very, very slowly or very, very sideways. I mean, look at yesterday on the Aussie New Zealand and the day before, you know, with that big swing and then that. It's just, you know, we're stuck, aren't we? So watch support levels. Aussie New Zealand, this is a quadruple bottom forming on the Aussie New Zealand. Yeah, just look for support bounces. You got to be pretty quick to get into them, though, and look how much reward you're eventually going to get. Really worth it, is it? Sideways. Sideways. Nothing going anywhere. So take what you can when you get it, basically, at the moment. Okay, so 5-minute range about to complete. DAX, you're going to be too big, aren't you? 30. Oh, 352. That is spot on. I have to measure that to the exact pip. 354. I don't think I'm going to get... No, I'm definitely not getting a DAX on now. So FTSE's the only thing I'm going to trade today. Really? Ugh, not even going to get on the FTSE. So that initial cash balance has gone in at 58. Too small. It's less than 10%, likely to get whipsawed. So I'm not trading this morning. 370, that's too big. That's over 20% of the daily range. So you're going to find it hard to get to our target. Nothing worth setting up on. So if you want to trade this morning, it's up to you if you want to take that. But obviously, if you're going to use risk as the 5-minute opening range, you've got, I mean, it's pretty much this hourly candle, virtually, isn't it? Yeah. So it's pretty much the hourly candle there. So if you're going to get in on that, you're going to need 1, 2R. You're going to need to hit that previous day's high to get a 2R on it. So that's the trade, is short now and trade it down to yesterday's high for a 2R reward. But it may well just do that. FTSE has just gone for a long, basically. So on the FTSE, you know, this is why I don't trade when we're below 10% of the range. It's very easy when you've got such a small candle like that for a big order to come in that way, a big order to come in that way. The market just whipsaw you into a hedge and then rotate for the day. So it's just not really worth taking. That's what the statistics have shown anyway. But, you know, it doesn't mean it can't fly and put in a 125 ADR. It can do whatever the hell it likes. It's just that the odds of getting a risk reward payout when you've got ranges below 10% and above 20% drop. So statistically, not worth taking. So we'll see where we go on those. I'll come back to those in a bit. Well, I don't know if I will bother coming back to those in a bit because I haven't got any trades on. And there's not really anything to cover on FX. So unless anybody's got anything to look at, I've got nothing to talk about this morning. I'm putting together a new set of training at the moment. So I might just go and get on with that this morning. There's nothing to look at, really. At work, trading in my truck. Snowstorm outside, very peaceful, very nice. We've got loads of snow here. It's amazing. Oil, don't trade oil, Shipcat. Amy, 3.05% this month on ADR reversals. Good job. Yeah, ADR reversals will have done very well this month. So all the ADRs you've had, because obviously the ADR reversals in a range-bound market are fantastic. And then when it's not a range-bound market, they're going to squeeze. So, I mean, look at that. If you'd have got in anywhere in that wick, you're out. If you got in anywhere on that push, you're out. It's the beauty of ADR. When the market is respecting it, it's absolute money-making machine. ADR reversals have had, 20, 30% months, the EA running ADR reversals. And then you will go into squeezes where you'll take high drawdown because obviously when you're getting an ADR reversal, if you're not extended on the RSI like there, you'd have taken that short and this decided actually, no, we're going to push all the way up into here and get extended above RSI. You've got to sit through that. And then when it gets up to RSI, if it got embedded and pushed all the way up to that high, you're sitting through that. You can never know, can you? One or the other will happen. So stuck at the minute. 2 positions on each. Not really going anywhere. Wanted to try a demo on Darwin-X, but they only give 1 to 33 leverage. Yeah, that is the leverage in the UK. You can't have any more. That is it. That is FCA regulated leverage. Have you thought about doing your own hedge fund? Nope. No, I don't want to be in control of anybody else's destiny apart from mine. That's why I don't have copy trading accounts. I don't run Darwin AIs. I'm trading for me. I show you what I do. I teach you what I know. but I trade my accounts. I don't trade anybody else's, and I never will. I don't want that. I've said to somebody in here the other day who was talking about setting up a sort of a PAM so that they can people can copy them, trade their own, trade what they're doing. The whole reason I did this was so that I do not have to work for someone else. The minute I start a hedge fund, I have other people's money I'm responsible for. That's working for someone else. I want to be able to shut this stream down in whenever I want to, go away and decide whether or not I want to even bother streaming this afternoon. I'm responsible to me. I own my own money. No one tells me what to do. The thought of having £1 million worth of somebody else's funds under management is just not of any interest. Yeah, I might make 5 or 10% of whatever I make out of it. Great. But I don't need that. I've got my own capital. If I didn't have my own capital, yes, it might be a different story. But luckily, I have my own capital, so I don't need to do that. Not my idea of fun working for people. Pound dollar and dollar yen. So dollar yen, I'm already in. Short. Yen will power up at some point when the interest rates rise. US dollar will be decided on Thursday when the CPI figures come out, positive or negative. But at the moment, we're looking for a pullback. I'm looking for a pullback down into this area here. So there's two levels basically which potentially going to get tested. So you kind of got, it's what it's kind of testing at the moment, really. So we've got this area here. We pulled back down after that rally, pushed, tested, broke it, tested, came down, pushed back through it, hovered around it. We just tested that level again. So either this area is going to hold and we're going to bounce, or we're going to come back down and retest that double top, which has already been tested sort of 3 times as well. So this weekly level, which is ADR today, that's where my target is. Yeah, you can see my target is there. So that's what I'm looking for, is a push back down into there, which is a 50% retracement on that move. Then we'll see where we go. Pound US dollar, it's not going anywhere. It hasn't gone anywhere since 13th of December. Totally sideways. So watch the highs. That propulsion gap is that high there. And watch the lows. So it's this spike, retest, retested 3 times. So long it from there, short it from there, or potentially from there. But that would be much better because that is also ADR. That's your December monthly high and ADR high. If we get up to that level, there's going to be limit orders triggering down from there. But until we get to an extreme, I'm not interested. Don't trade from the middle of a range. It's a 50-50 shot. There's always a 50-50 shot, but there's even worse 50-50 shot from the middle of a range. Is there an app that I can use to calculate the lot size relative to my account size? Yeah, Google. There's loads of them. I don't know if there's an app or not. I don't know. Go and have a look. I don't need that, do I? Because I've got an EA that does it all for me. How's the new hedge strategy going? Yeah, good. I've got some more coding to do on the EA. So it made a little bit less profit yesterday than it should have done because I took a loss for no reason. But so yeah, it's up 4% at the moment. I had to recode the EA because it wasn't quite doing what I wanted it to. So that's hedged. Aussie Swiss. Short only. CAD yen. Hedged. Euro yen. Long only. And trailing. 69. ADR is, oh crap. Shut it down by accident. Come on. Yep. Euro yen 128, so 69 is about right. Trailing on that. So yeah, So trailing the hedge, so just squeezing the hedge on that one. Euro US hedged. Nice small hedge there. Euro US, only 700. So that's half of what the hedge would normally be. Pound Swiss, short only. And New Zealand, nice small hedge on that one as well. $400 hedge. Lovely. And New Zealand US. So yeah, all good. CAD yen was the one that kind of screwed up a bit because I had that. I had a cock up in the EA, so it was taking the wrong lot size. So it's managed to get itself into a big wide hedge and also not bank as much money as it should have done. So I've adjusted that now and it's all working properly. But yeah, it's going fine. As I said, this is a live forward test. So I'm working on the code at the moment to try and identify inside hedges to work when we get big wide hedges like this. So the idea in this situation here with the CAD yen, ADR on the CAD yen is 100. So the distance between the hedges at the moment is 150. So that's 1.5 ADR. So the idea will be, at the moment, it's going to take a good 3 ADR move to actually get one of these into profit, which is then going to leave the other one out of profit, if you like. So the idea is when we move back inside the hedge is to re-hedge. So we will trigger a second hedge trade in here when we get somewhere in the middle. And basically, if the market pushes up, that hedge works and that hedge reduces. And if the market pushes down, that hedge works and that hedge reduces. Whichever of those hedges becomes profitable, we use the profit from all of those hedges to reduce the opposite hedge. Yeah. So this is the logic I'm working on at the moment. There's 1,000 ways to do this, and it's highly discretionary how you do it. So I'm just basically working different logic strategies basically to figure out which I think is the best to use. Personally, what I'm erring on at the moment is when we get back to somewhere in the middle of here is literally on a candle close, trigger a hedge at half an ADR away from price, and whatever the hell it decides to do, get in. Because it doesn't matter, does it? It's a coin flip. We're not looking for any kind of clever strategy. We're looking basically to reduce these hedges down by using momentum. And if it decides to hedge itself, re-hedge itself, i.e. it goes like that, and then it goes like that, and then it comes back into here. So we've got a hedge long there, a hedge short there, a hedge short there, and a hedge long there. Fine. We just sit, we wait. And then when price decides what the hell it wants to do, as soon as it's moved a distance, we start to trail our profit, and then we exit that. And we use all of that profit to reduce that hedge and that hedge. And then we rinse and repeat. Wait for the cycle to start again. If it goes down, no problem. We use all that profit and we reduce that hedge even more. It's exactly the same as position trading, except it's kind of inside out. Position trading is dollar cost averaging in and moving your price with price. Hedging is basically bouncing around and reducing price down as price bounces around. It's the same. It's virtually the same strategy. It's just this has got a locked in risk. Position trading hasn't. So you can use higher risk with this. As you can see, this has made $1,200 in, what's it been running? 4 days. You'll struggle to get that out. You'll struggle to get 4.5% return in 4 days in position trading, won't you? That's not a normal return. But then again, we wouldn't be in 15% of drawdown within 4 days either. So totally different strategy based on the same principle. We haven't got a bloody clue what the hell this is doing, so let's just extract money from it when it moves. Same thing. Yes, its testing's going well. I'm finding bugs. That's what it's for. So, but whether or not it makes money, we'll find out. Yeah, guys. So that's exactly why we don't take tiny ranges. So you would be hedged there because the market's just not got any direction. That's why we've got a tiny range. There's no volume. There's no volume. There's no direction. If there's no direction, we're likely to go into rotation. So, and this one, obviously, we put in a massive amount of movement. We've put 20% of our move in at the open. Market's exhausted. No volume left. We've got to wait for some speculative players to start pressing buttons. So again, that's why we didn't trade the DAX. So that's done. DAX is dead. FTSE's dead. Not trading those this morning. Interested in trading indices, but spreads seem excessive. Change broker. If you've got big spreads, change broker. You should be able to get 1.5 pip spreads with any decent broker. You're always going to get a spread, but if you're going to trade manually, I don't know if you can trade with them where you are, Franco, but TD365 have the tightest spreads in the industry for indices, excuse me, and they're fixed. Yeah. So 0.6 on the FTSE, 0.9 on the DAX, 1.5 on the Dow, 0.3 on the S&P. NASDAQ's very similar. So these are the best fixed spread broker for indexes there is out there. But you cannot use automation and you cannot use MT4. It's their online system. If you want to use MT4, you can use it with TD365, but you can't have fixed spreads. They give you variable spreads on MT4, which is still good. Their spreads are still very tight. I would use them if I wasn't using DOW&X, because I've had accounts with DOW&X for over a decade. So the only reason I'm using DOW&X is because I'm established with them. I've got capital in there already, which I've just transferred. So other than that, I'd use TD365. They're really good. Very, very tight. Morning, Rajiv. Morning. How's the Hedge EA doing? I just answered that one. Interesting open on the indices again. Yeah. Tight and wide. Opening range breakout EA today would have done very well on that DAX. But wasn't trading that. With the SIH, can you explain rehedge situation? Should I scale in if rehedging or put the same lot size on? I don't really know. Up to you. I would always use the same lot size. If you use a different lot size, you're not hedged, are you? You've got a bias. So if you look at this, for example, here you go. Here's one. Look, CAD-yen. So this is 1.22 long, and this is 1.9 short. So the bias is short, bearish. I want this to go down at the moment. If it goes up, it's going to get into more drawdown than if it goes down. So if you don't have an equal bias on your hedges, you have equal lot size on your hedges, you have a bias. But the way that I'm looking to hedge is there will always be a bias. Whether the bias is right or wrong, not a lot I can do about, is there? Because bias, as we know, is not really easy to determine. But this strategy is doing drawdown control. So it's reducing the lot sizing down, and then it gets in with the same lot size every single time it takes a trade, regardless of whether there's a trade on or not. It will always take the same lot size. Other hedging strategies out there will always tell you to use the same lot size. So, for example, with this hedge here, and this applies exactly the same to the stock index hedge strategy. It made money on that short, and what it did was, we can't see it, but it closed out. That was 1.9, and now it's 1.22. So it closed out some of that long. What the hedge short should have been, some people will tell you, is you should take a 1.22 there, so you have an equal long and an equal short, which is 100% hedge. The difficulty with that, and I've proven this with the EAs that I've built retesting hedging strategies, is you will get this issue where your hedge gets wider and wider and wider, because we never get back there, right? All that happens is price moves down. So all that happens is you take profit on a short, it comes back up, you re-hedge short, you take profit on a short, it comes back up, you re-hedge short, you take profit on a short, it comes back up, you re-hedge short. Before you know it, the hedge is 5 ADR. and you've got exactly the same lot size on both of these. So what you've got is a position where, yes, the lot size has been reduced and reduced and reduced and reduced and reduced, which is fantastic, but you're never going to get out the bloody thing. You'll be in it for months. So I've got hedging this exact EA actually that I've tested the strategy with, using the same lot size as the long on every hedge, for example, in this case. It will take like 18 trades a year. The reason it takes 18 trades a year is because the first trade it takes, the hedge expands and it ends up spending the entire year bouncing around inside the hedge, not making any money. If you have an uneven hedge bias, what will happen is eventually you will get out of that hedge. You get out of it a lot faster. You will take more drawdown, but you will get out of it faster, allowing you to reset this instrument and benefit from the next move, make money. It's all about, hedging is all about, for me anyway, hedging is all about making money. It's not about, that's the opposite. It's about making money, but it's not about making money on the hedges. It's about getting out of the hedges, because the hedges are wrong. If you hedge, so let's take this pound New Zealand, for example. Yeah, so you can see it's already made money. There's a long there which made money. There's a long there which made money. So it's got 2 winning trades so far. Yeah, that's the idea. What I want to do is when a trade is triggered, I want it to get in and make me money. That's the job, making money, isn't it? If I get in and it doesn't make me money, because when I get in, I don't know whether this was short or long first. It was long first there, I guess. I don't know. Then it was short, right? That's locked in now as a hedge loss at $370. My goal here isn't now to make money. My goal is to get out of this as fast as possible so that I can reset and just have one position on that hopefully will run. The odds when I get into any trade are 50-50. It's either going to run and make me money, or it's not and it's going to hedge. If it hedges, I want out. So the way that my strategy is set up is, if I'm in a hedge, what I'm going to do is when it pushes in one direction, it starts to make money, it will close that out on a pullback. If that pullback moves back far enough that I can make $50, I will shut it. Get out. Be done with it. Had enough. Yeah, because it was wrong. I want to be out of that trade so that I can get into a new one with just one position on that's going to run and make me money. Because if it runs, it will make me $2,000. If it's hedged, it's going to sit there, guaranteeing me $369 loss. Yeah, so that my approach to this is a little bit different to a lot of other people's. It's simple. It's too complicated, all the other stuff, I find. So with the stock index hedge EA, if you get a situation where you get hedged, it pushes up, you exit the longs, you go short, and then it pushes up again and you re-hedge there. Yeah. If you re-hedge with the same size long as both of your shorts combined that you haven't managed to get out of, you're just locking in that hedge. Nothing wrong with that. You're locking in a loss. But if you get in with a larger size that way than the hedge, if it pushes up, you've got an opportunity to get out. But that's a personal preference. Are you looking to control your risk and go, I got it wrong today, let's just not lose a load of money? Or are you trying to make a load of money? That's a decision that you can make. Both are right. What if you get in with 2 times the lot size long than you've got short, and then it pushes down against you? What are you going to do? 2x the hedge short again. So now you've locked in 3x loss instead of 1x loss. Now what do you do? Do you see what I mean? It gets super complicated, hedging. It's very, 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 very complicated. This is one of the things I'm putting together in this new sort of education series I'm trying to put together, which I've been trying to put together for about 6 months, but I keep getting waylaid with other things. But hedging is a fantastic strategy, but the cons of it are complexity. It's incredibly hard to do properly. And there isn't a proper way of doing it. There's a million opinions which differ on how to hedge. They're all right. They're all wrong. They've all got pros. They've all got cons. There is no, you have to choose which you prefer. So pick one is all I can say. If you re-hedge, using the same lot size, you're locking that in. You can't lose any more. If you re-hedge with an offset, a different size to the opposite hedge, you have the ability to make a lot more money, but you also have the ability to lock in twice as much loss. Difficult, isn't it? Regarding leverage, I'm in the UK and have an account that's 1 to 500. Yeah, so have I. But it's not in the UK. You can't have a UK account with 1 to 500. It's against the law. You can live in the UK and have an account with 1 to 500, but it's an overseas account. So my Forex are not located in the UK. They are not FCA regulated. IC markets are not in the UK. They're not FCA regulated. You're using IC. Shala70 just bought the EA, wondering if it will ever be disappeared. Nope. I'm not planning on disappearing it. If I disappeared, it's not disappearing, is it? If I disappeared, I would need to literally physically remove it from the marketplace. So unless I press the remove it from the marketplace button, it's never going anywhere. You were saying the risk is fixed because once you're hedged, you can't lose more than that. But if you're re-hedged, that will increase your risk. Yes. So so using an uneven hedge will potentially increase this. This is what I'm testing. This is the purpose of this test, is to see what we get. I am estimating somewhere around about 28% drawdown, maybe a little bit more. And it's going to depend on how it re-hedges. And it's going to depend on how many hedge, yeah? Because the thing is, this is, looking at this, right? This hedge, when we get all of these locked in as hedges, if they all get locked in as hedges, that will still fluctuate, because if there's an uneven hedge, i.e. there's been drawdown control done, that will fluctuate. So you're going to have to use some of this to reduce some of these hedges. Yeah, and this is what I'm working on with the EA at the moment, is how to do that. With this one, literally, if this does this for 4 days now, I am doing nothing. It's doing nothing. Nothing's doing anything, so you can't do anything. Yeah, if the market's going sideways in a hedge, you can't do anything. There is nothing to do. Wait. The whole purpose is we don't know which way this is going. The market doesn't know which way this is going, so we're going both ways, and we will wait for the market to go. When the market goes, we will get out of that when it shows signs of strength. Then we will wait. We will re-hedge there and wait. Now, if the market comes back up to here, excellent, we're out and we've made that profit. If the market goes down again, we hedge again. Now we have a wider hedge and we are in with a larger lot size short than long because we've closed a portion of this out. And if that continues to go down to there, we close that out and then we close a bit more of that out and we wait for this to pull back enough so that we can shut the whole of that using the profit we made on that. And then we've made profit on the way. That's how hedging works. But this is, it's not irrelevant, but it's a lot less important, isn't it? Because it doesn't matter which way it goes, we are always going to make money. Every time the market makes a move, you will bank. This will never not be green because you are only banking profit. You are then using this profit to reduce the drawdown. Exactly the same as position trading. So, but unlike position trading, if I was in 15% drawdown position trading long on the pound New Zealand and if this kept on going down, this will get exponentially larger. With hedging, I just go, stop getting larger. Wait. That's the difference. This is this what I'm putting together is it's kind of like a Bootcamp version 2. But what I want to be able to offer people is multiple ways to trade. Yeah, because as you know, there is a million ways to make money in the markets. None of them involve stop losses. So what I'm trying to put together is a kind of course, if you like, but it's more of a, this is how this thing moves, and these are ways you can extract money from it. Pick one type thing, rather than saying, because at the moment the Bootcamp talks about nothing but position trading. Yeah. But you don't have to position trade. You don't have to do that. You can use a stop loss to make money, no problem. But you have to use a stop loss with a wide enough stop based on the average daily range of the movement at a level that makes logical sense to do that. So I'm going to cover how to use stop loss strategy, because I make money using stop loss strategy in prop last year. I made loads of money using stop losses last year in prop. It can be done. But it doesn't suit my mindset. Other people's mindset it will suit. Position trading suits my mindset. Other people look at it and go, that's hideous. I couldn't wait that long for profit. Doesn't suit your mindset. Other people might look at hedging and go, wow, that makes total sense. I'm going to use that. All of them work on the same principle. The market moves up and down, and you have absolutely no clue which way it's going. So whether you use position trading, stop losses, or hedging, you can use whichever one fits your mindset, but they will all be based on the same strategy: random market movement at support and resistance levels, or extremes. Yeah. But what I want to do is teach how the market moves, market structure, support, resistance, propulsion, and then say, this is how it moves. Do you get it? Yeah. Brilliant. Apply one of these risk criteria to it. Either wait for a RSI extension, jump in with a stop loss of 1/2 to 3/4 of an ADR and take a profit at some point, or get in at a support resistance level or propulsion gap, take a short, use a stop loss at X and take some profit. Or don't use stop losses, wait for an RSI extension or a support level, resistance level, take a short on a market reversal, and if it doesn't work, scale in and get out when you want to become a position trader. Or get in at a support resistance or RSI extension. If it doesn't work, hedge the opposite direction when it breaks 1/2 an ADR above. Wait. This strategy is the same. We use support resistance, we use RSI extension, we use propulsion moves, we use bank movement, market movement, how the market moves to make money. But you pick how you want to do it. I don't care. I don't know which one is best to use. I don't know which one is going to work. Nobody does, because we can't predict the future. So if I can teach people how the market moves, that's all you need to know. The banks move this. You've got no control. Flip a coin. Either use position trading, stop loss, or hedge. Pick one. I don't care. They all work. I've proven it. I do it in here every day. I position trade in here every day. I use a stock index hedge every day. I've used the ORB in here every day. I make money with it all. What I do is I wait for the market to move into profit, not looking for an entry. Like somebody said in the Telegram group this morning, their EA has taken a trade they didn't expect it to take. My answer was, excellent, it worked. Don't worry about it. You could have flipped a coin and got the same result, because when the EA took that trade short, regardless of whether it took it where you thought it was going to take it or whether it took it 10 pips lower or 10 pips higher, the odds were the same, weren't they? It's going to go up or down. What happened after you entered is why you made money. You didn't make money because the EA took a trade. You made money because the EA took a trade and the market pushed in your direction. That's the bit that makes you the money. As long as you know how it moves, how you apply risk has got nothing to do with making money as such. It's not a better or worse way. It's just the way that you can make money out the market, the way that you're comfortable. So I want to kind of separate trading into simpler form. Yeah. I'm going to teach you how this works, how this moves, right? If you understand that, you can make money. Yeah. I'm not going to teach you a strategy. I'm going to teach you how to extract money out of the market using 3 risk criteria. There are only 3. There's only 3 things you can do. You can get in, get out with a stop loss and lose money. You can get in, you can change your price by dollar cost averaging, or you can get in, and if you're wrong, you could get in the other way and wait for the market to move in your direction. There's only 3 things in the world that can happen. There's 3 things the market can do. It can move up, it can move down, and it can go sideways. There are only 3 outcomes for every candle. It can be bullish, it can be bearish, or it can be indecision. There's 3. There's a rule of 3 with everything you do. When the market pushes up, if it's going to pull back and continue market structure, it's going to pull back either with a shallow pullback, a medium pullback, or a deep pullback. It's a rule of 3. Everything moves in 3s in trading. There's 3 ways to make money. Yeah, everything works in threes. So I'm trying to put something together that is just literally going to teach market structure, because that's the only thing you need to know. If you know market structure, you know how to make money. How you make money is up to you, because everybody's different, aren't they? And there isn't a way. I'm not going to teach you. When you're hedging, you do this. If you do that and you go in with twice as much, you'll make twice as much money. If you don't do that, you'll do this. I'm going to teach you what a hedge is and what the outcomes are if you do it. You decide how to execute it. I don't know, because I don't know if it's going up or down. Should I take a double lot size short on the hedge that I've got long? I don't know, because yes, you should if it's going to go down, but if it's going to go up, you shouldn't. You're asking me to predict the future. I can't do that, but I can tell you how the market moves. And if you can plan how to get out, you'll make money. It's all about planning, isn't it? This is what we know about position trading. I'm sitting here in these positions, which I've been in for however many days I've been in the US dollar yen. 1, 2, 3, 4, 5. I'm sitting in it for 5 days, not because I'm right, not because I'm wrong, but because the market, when I got in, pushed up and it pulled back to 50%. It hasn't gone anywhere. I'm in it because I'm in it. Yeah, I don't know whether it's doing that next or that next, but I do have a plan. If it goes down, I get out. If it goes up, I add. That's my plan. That's position trading. What you could do, because you are short by 0.28, is if it breaks above that high there, go 0.28 long and turn it into a hedge. Which do you prefer? Both of them will work. Don't know. Or what you could do is, if it pushes up above that level, you could put a stop loss there and take a loss, and then flip long and put a loss down there. And if it moves more than that loss you took, you make money. Risk, reward. They all work. I just don't know which one you should use and which one is going to be the right one on this trade today. So all I think you need to learn is this. If you know that, you know where it's going. All you've got to do is put a risk allocation on that or that, which is going to have a positive outcome. So I'm trying to put that together at the moment, which is basically really, 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 really simplified trading. Yeah, it's boiling everything down into threes, which is basically what we know, isn't it? It goes up, goes down, goes sideways. There is nothing else. And it's not your control, it's the market. So the answer to your question, whoever asked it, was either. I can't be any more accurate than that, because I don't know. You're saying risk is fixed because once you've hedged. Oh yeah, sorry, I've answered that one, haven't I? EJ, I've already covered that. I'm out. So target was propulsion gap. So again, the rule of three. It's either going to be a shallow pullback, a medium pullback, or a deep pullback. So at the moment, we are looking like a shallow pullback. It might go further. It might go further. One of those three things is going to happen. If it's going to continue in bullish market structure, if it's going to switch bearish, it's going to break that low. I don't know. But I'm out of it because that was my plan. My plan was to get in short and target that propulsion gap. My plan worked. I'm out. Please repeat why you didn't use pre-market breakout. I'm sorry, this thing is really confusing. Because the range was too small. So the ranges were too small today, weren't they? That's all covered in the video, Themba. Very simple. There's two settings in the EA, minimum range and maximum range. Yeah, the minimum range is 66, which is 10% of ADR. The maximum range is 133, which is 20% of ADR. Yeah, the pre-market range today was lower than 10% of ADR. When the market range is lower than 10% of ADR, there is a high probability of you getting whipsawed at the open because it's a tiny little range. And if the market pushes up slightly, pushes down slightly, you get hedged. Yeah. If the pre-market range is too big, you've got to go a long way to get a 2R return. You need a 2R return to make any decent money in anything. Yeah. So if the range is above, in this case, 352, and it's done more than 20% of its average daily range before the market opens or on the initial 5-minute cash balance, it's going to be very hard to make a profit. So therefore, we don't trade that either. Today's instances, both were too small. That's covered in the video. That's that range input here, look. Minimum range as a percentage of ADR, maximum range as a percentage of ADR, 10% and 20%. You don't have to use it. It's entirely, again, there's no right or wrong. Today, where's the market open? That's the market open, yeah? Today, if you had have taken the 15-minute pre-market today, or you'd have taken the whole pre-market today, well done. You've just made a hell of a load of cash. However, in my testing, when you had a small range, more than 50% of the time, it would whipsaw you before it moved, hedging you, meaning you have to manage a hedge. For me, I'd rather not be in than be in a hedge, because hedges are harder to get out of. But if you'd have set yours at 5 and 30 today, you'd have taken that. Is it right? Is it wrong? Today it was right to take it. The other day on the foot. So prime example right on the screen here. On the DAX, it was right to take it. On the FTSE, it was wrong to take it. So on the FTSE, the EA saved me from a hedge today. On the DAX, the EA stopped me from making profit today. Which is right? Both. Which is wrong? Both. If I'd have known the market was going to do that on the DAX, I would have shorted it. But I would have got hedged on the FTSE. Swings and roundabouts. It's random. Everything's random, isn't it? But you've got to have a set of rules. Those are mine. You don't have to use them. You can use whatever you like. In my testing, that's what I've come out as my preferred sets. But I'm not right all the time. I'm wrong today on the DAX. I should have shorted it. I didn't. Yesterday, I shouldn't have tried to get out yesterday of the Dow. I made a loss on the Dow yesterday because I tried to get out the Dow. What I should have done is gone with my original plan, which was let it get to ADR and then short it. I would have made money on it yesterday, but I didn't. I got out at 3/4 of an ADR and lost. Flip of a coin. I have no idea. It's either going to work or it's not. Everything you do is going to work or it's not. You just need a risk mechanism to manage it. That's currently printing a triangle on the 1 minute. In there, yeah, probably, wasn't it? Sure. Do you get concerned about lack of protection when dealing with an offshore broker? I get concerned about crossing the road when there's a fast car approaching. If you worry too much about everything, you'll never do anything. So yeah, I have no FCA regulation, but I have Singapore regulation. It's not as good as FCA regulation, but then again, I want to be able to trade. I can't trade with 1 to 33, so I have to go where the money is available. If the money's not available in the UK, I go overseas. It's the age-old question, Mumo. Do you want to trade? Do you want to position trade? If the answer is yes, you need an overseas broker. The downside to using an overseas broker is you're not regulated by your country's financial regulator. If you don't want to position trade, you can use anybody in the UK and you're 100% covered. So if that black swan event happens, that's happened twice in the last 15 years, you will be covered. Overseas broker may or may not cover you if that black swan happens and you're in that instrument and you're the wrong direction and all of that falls into line at one point, sometime in the next decade, possibly you might lose your account. Couldn't give a monkeys. There's nothing I can do about it. It's like everyone goes, but you shouldn't trade the yen because of the overnight swaps. Fine, I won't trade the yen. But then when the yen moves and I make $25,000 a year out of it, should I not trade it because the overnight swaps are slightly higher than everything else? It's a cost of doing business. Do I have a choice? No. Commission, spread, I have to pay it. I haven't got a choice. I can't go and knock on the FCA's door and go, could I have an account where it doesn't cost me any money to trade, please? No. Can I live in my house and not pay council tax? No. Can I have electricity without paying for it? No. Can I trade 1 to 33 leverage or higher in the UK? No. I'll go and find somewhere I can. You don't have a choice. Just get on with it. People worry too much about tiny things. You should not worry about tiny things. It's only a big thing if it happens. People always are concerned about the black swan thing. Yeah, as I said, I've had one proper black swan in my lifetime trading, which was the Swiss yen, the Swiss peg removal. I was on, whether you were on the right side or the wrong side of it, didn't matter, because the black swan meant that none of the orders got executed anyway. There wasn't any liquidity available, so therefore you can't do anything about it. Just don't worry about it. It's not gonna be a problem. But if you're worried, just don't put as much money in the broker. Put less money in the broker, therefore that you can lose less. Somebody contacted me on MQL5 the other day saying they couldn't withdraw from Forex. I've never had a problem withdrawing from Forex. They're one of the largest brokers in the world. If they've had a problem, there's obviously some problem with their card or something else. But it's a problem that only occurs when you try and do something. If you worry about whether you can withdraw from your broker before you deposit with your broker, you'll never get anywhere. You won't do anything, will you? You'd be scared about, can't be scared about stuff. This is a high risk job where you are putting your entire pocket of money on the line every time you press the button. If you're worried about that, this isn't the job, is it? Go and work in McDonald's, it's safe. Trading, not safe. When do you think you'll launch the Hedging EA? I don't know. I don't know. When I can make it profitable. If I can make it profitable. Yeah, I don't know. It's got a lot of work to be done on it. I was hoping it was going to be ready before Christmas, to a point where I could test it. I couldn't even do that. So I've only just gone live with it now. So it's got a lot of work that needs doing on it yet. It's buggy in the fact that it's not coded properly because I don't need it to be. I need it to be functional. I don't need it to be pretty. So it's got a lot of stuff it needs tweaking in it. And I need to test the strategy logic and the EA logic. So what I'm planning on doing, which is what I'm hopefully going to get done this morning, is get it tested on 5-minute and 15-minute timeframes with adjusted ADRs so that I can get in and out quick and have hedges complete quick. Because at the moment, it's H1 is what I will be trading it on, I think. But I need to get testing done faster. And with H1, it's going to, like this one here. So I'm in this pound New Zealand now, which I got into wherever I got into it yesterday, I presume. If this now sits sideways for 3 weeks, I can't finish this test for 3 weeks on a 5-minute time frame using 0.2 ADR instead of 3/4 of an ADR, which is what this is set to. I can test it within 24, 48 hours. So I need to do some smaller level testing as well. I'm not expecting it to be massively profitable, but then again, it might be surprised. That might turn out to be massively profitable. In which case, then I'll be trading M5. But I don't know. I haven't got an answer to that one yet. May I suggest a dark background on your charts? No. White, bright eye strain, hard to see. I find black hard to see. Personally, that's why I use white. I can't trade on dark charts. I find them very difficult to read. Essentially, it's position trading, but when you go into drawdown, instead of dollar cost averaging, you take the other side. Yeah, that's what hedging is. But again, we're still using market movement. This strategy is, and this is what I was saying about this new kind of, I kind of call it a course. It's more of a, memory dump, if you like, but it's the same thing. Market structure is obviously long at the moment, so I'm expecting this to go up, but I don't know if this is now going to put in an M pattern reversal and come down, but it doesn't matter, does it? Same with position trading. When the RSI gets extended, we go long. We're expecting the elastic band snapback to happen. If it doesn't matter, because I'll just move my price. With this method, instead of moving your price, you are waiting for direction to pay you. And then you wait for the pullback, exactly the same. We're still waiting for market structure to play out. But now what's happening with the profit take move is the profit take move is not making us money. It's reducing our drawdown to less than our profit on the hedge. So it's reverse position trading. Instead of dollar cost averaging in on the profit takes, we are exiting on the profit takes as our drawdown reduces. So it's kind of a flip to position trading, which is why I think it will complement it very, very well. Because it's still the same thing. We're using market structure movement to make money, but we don't know which market structure is going to be, do we? Morning, Harold. Morning, Astro. Yes, my Bollinger Bands have been very narrow the last 2 days. Yeah, they will be. On my prop account, I reduced the number of positions by trading only in the direction of the positive swap. Yeah, but then you can't trade half your setups, can you? It's not right or wrong, is it? But you're missing 50% of the opportunity. If you get the setup of a lifetime, right, on, let's say you're trading US dollar yen, right, and you get US dollar yen pushes up to 150, bounces, pushes up to 150, bounces, pushes up above 150, pulls back down again, pushes up, hits 150, goes short, market structure shifts to the downside. Oh, this looks like the setup of the century. This is the start of the annual yen rally. I'm not going to take it though, because it's got negative swaps. You just missed the setup of the century because of swaps. Forget swaps. They're a cost of doing business. You can't get out of them. Use them. It's just trading. I'm short at the moment, US dollar yen. Yeah. Look at my average. Yeah. When I get to there, that red line, that will say something like -19, -$25, because I've got $25 worth of swaps already costing me money. But that is still a profitable trade. The longer it plays out, the less money I make. But there's nothing I can do about it. You will just take less trades. You won't take those shorts on those yens because the swaps are wrong. There's nothing wrong with doing that. You can do it or not do it, right or wrong. It's just less cost of doing business, but less chance. Let's say, for example, I'm on this tomorrow, right? And we're sitting here. Yeah. And this is on Thursday. We're just about to get the CPI figure for the US dollar. What I'm going to do is I'm going to move my stop losses all the way down there, my TPs all the way down there. Why? Because if that CPI figure comes out as 4% or 0.4% lower than forecast, this thing's going to come down to 225% of ADR. Yeah. Does the swap make any difference? I'm taking that profit, but I wouldn't have taken that profit if I was worried about swaps. It's just stuff you can't control. And just, if it's, my whole ethos for trading, as you know, is I'm not in control. No one's in control of this. The banks are. You don't know whether it's going up or down. If you're not in control, stop trying to control it. I can't control where price goes, so I just get in and wait for price to go my way by changing my price. I can't control I have to pay a commission. I can't control there is a swap. I can't control that there is a spread. So I don't worry about them because they're out of my control. I will try and minimize them as much as possible. But at the end of the day, if I've got a beautiful setup on the screen, I'm going to take it. Nothing I can do about it. New Zealand dollar yen, sideways 4 days. So we've had the rally. All the yen pairs are exactly the same. So New Zealand dollar yen has hit resistance, bounced off that multiple times. We've had a reversal and a retest, so the structure shifted short. There's your high, low, lower high, lower low, pulling back at the moment, looking for a push down. We've got this area here, which is this accumulation break, these two big propulsion gaps, which it might well buy out of. At the moment, we've got a 50% retracement, or roughly a 38% retracement on the move. So it could bounce. I'm not in this one, I'm in the others, but yeah, it's bouncing out this propulsion gap at the moment, but structure has shifted back to the downside from that double top. So it's whether or not we get that yen strength coming through, which we don't know yet. Amy, I want to have less trades. So either I trade less pairs or I trade only in one direction because of the 5% daily drawdown. Yeah. I mean, this is the trouble with prop. You're restricted, massively restricted. 5% is nothing. Look at me. I mean, I'm sitting here at the moment. I've got really itchy nose at the moment. Still getting out of my cold. I've got 3 positions on at the moment with 2 trades on each, and I'm sitting in nearly 1% of drawdown. That's 20% of your allocation for prop. You know, it's that tight. And if this suddenly yen decides to rally, that's going to go up to 1.7, 1.8. You'll be too scared to take trades on a prop account. On a normal account, I'll just be getting in. I think half the trouble with prop is the psychology. They really hit you psychologically. Yeah, you're scared to do things because of those restrictions. Like Mumo was saying, yeah, being concerned about not having your own country regulation. You can't worry about it. You just have to trade. If your trades hit that drawdown, they hit that drawdown. You will lose that account and you have to go back and start again. But you shouldn't not take trades because of that. Yeah, the system or strategy will or won't work based on what the banks decide to do with the price. Your system or strategy doesn't control whether you make money. They control whether you lose your account, but you need to take the trades. Because when you're sitting in 3.5% of drawdown and you get the setup of the century on the New Zealand dollar yen, yeah, you don't take it because you're worried about 1.5% of drawdown. If that thing tanks down to there on Thursday and makes you 6% on your account, you've missed the account pass because of that number. Nothing else. That number, that 3.5 you were in, stopped you making all that money. Take every trade, every opportunity, because you don't know which one is going to work and which one isn't. Yeah, and if it blows, it blows. That's the game. That's what you have to accept. You have to accept it's a game with prop. It is gambling, 100% gambling. There is no trader on the planet that's held an account for more than 3 months. Prove me wrong. No one's done it. Why? Because there isn't a strategy on the planet that doesn't go into drawdown. They all do. And they all go into drawdown by more than 5 or 10%. All of them. Me, Tom Hurgard, Larry, whoever, everybody. Everybody. Every trader goes into more than 10% of drawdown on a day. They will have more than 5% of drawdown on their positions. It's trading. They know that. It's a gamble. Your gamble when you take a proper valuation is, can this $500 have my strategy pass the rules they've set without failing over the period of time it takes for the market to make that amount of money? That's it. That's the gamble. It's the same as going into a casino 3 times on the row and walking out with money in your pocket. Next time, you're not. Guaranteed. Nobody walks into a casino and walks out 4 or 5 times with profit. You will lose all of that money one of those occasions. The edge is on the casino's favor. The edge is in the prop firm's favor. Yeah. You will win sometimes. I won loads. But what I did was use a mathematical equation of input X, export Y. Yeah. That's what people don't do. They don't look at it like a gamble. Look at it like maths. If I take 10 prop evaluations and I spend $500 each, I have spent $5,000. If one of those evaluations gets funded and I can run that account up to $5,000, I withdraw. Stop trading there. If it's trade 1 or trade 10 on that funded account, stop there, withdraw, break even. Now, on this funded account, are the next set of trades I take going to be profitable, or are they going to hit the prop limit? If they're profitable, tick, gamble, paid off. If they're not, cross, gamble, failed, with a break even. That's prop. You shouldn't look at it in any other way, because that is all you can do with prop. Or you use 0.05% risk and you trade that account up over 3 to 5 months and you do it that way. That you can do. I imagine there are people out there that have had prop evaluations where they've done that. But for me, if I've got to wait 6 months to get through stage 1, stage 2, funded to an amount where I can take a withdrawal out that will pay my mortgage, I'd rather go and get a bank loan and do it from day one. Pointless. What's the point in waiting 9 months to get paid a small amount of money? It just doesn't work. That's what they're hoping you're going to do. This is why they've all removed the upper limit. Here, come and trade with us for as long as you like. 6 months into that, you'll be going, screw it, 1%. Go again. Wasted 6 months of your life. We've all been there. I tried position trading on a funded account and the daily drawdown limit was painful. Yeah. If you use the small amounts, you'll be fine. I passed an evaluation with prop on prop position trade. I did it in the live room. I passed evaluation position trading, but it was one of those months where we just had, ranges, and it was like, well, nothing squeezed, nothing. It just ended up tipping all the profit in there, and I eventually got rid of that drawdown. And then phase 2, I did the same thing, but I couldn't get rid of the drawdown. I tried to get rid of the drawdown and it hit the limit and I failed stage 2 evaluation. But I passed stage 1 with position trading, no problem. That was using 0.25% risk on H1M5, no problem. But month 1, it worked. Month 2, it didn't. Month 3, now if it worked in month 2 and it had worked in month 3, fantastic. But if it had worked in month 1 and month 2 and then not in month 3, I've wasted a quarter of the year trying to get funding. Just no. You haven't got the money to do it, don't do it. Good thing about the hedging strategy is it will get you into more stuff. Yeah, H1M5 can be very slow. That's the downside to position trading. But that's the downside to trading in general. And this is why people don't make it in trading. You wait for your setup. Yeah, this is the fear of missing out thing, isn't it? Yeah, this is what covered in the bootcamp. The reason most people fail a strategy, I remember this when I was learning to trade. I was trading a strategy. I don't know which one it was. I've traded hundreds of strategies over the years, but I was just trading a strategy. Let's say it was a Bollinger Band breakout strategy, yeah, where you take a breakout on the Bollinger and you mean revert it back to the mean. Yeah, I would sit there all morning on the 5-minute chart and nothing would break out of the Bollinger Bands. So I would go, I've just hit resistance. I'll tell you what, I'll take a short. Oh, damn. Okay. I'll wait for the next Bollinger Band setup. There isn't any this afternoon. New York session's open. There's no setups. Oh, that's just hit support. I'll take a long. So I'm negative 2%. Not because my strategy's no good, because I'm bored. Yeah. Position trading is very much like that. I've got 3 positions on. Nothing is setting up at the moment. What am I doing? Nothing. Waiting. Because that's the edge. The edge is we know that the strategy works. The edge is there because I'm not mixing any other trades into this. If there's no setups, there's no setups. Yeah. So you trade something else. Stock index hedge. Use another strategy. Use something else, but keep everything segregated. This is a slow burning strategy. Hugely consistent, will double your account in a year. But only if you trade it as it's meant to be traded. If you start doing this, that, and the other, and all right, I tell you what we'll do. Let's move the RSI trigger down to 65 and 35 because 75, 25 is giving me no entries. As soon as it hits that 65, what's it going to do? Scream up for 5 days on the trot and put you in the worst squeeze you've ever had in your life. You're going to be in minus 15% of drawdown. And why? Because you moved the strategy criteria. You've never tested 65-35. You've no idea how often it works or doesn't work. And you just happen to do it at the point where the New Zealand dollar said, we're going to put our interest rates up. And the Japanese said, so are we. Boom, boom. And all of a sudden you're off. But you won't lose money or go into drawdown for any other reason than you did something different to what works. Didn't stick to the strategy. Just have to wait. I have months where I make 2 or 3 or 4%. I have months where I make 20 or 25% position trading. It's nothing to do with me. It's whether or not this thing is volatile and moving. Some months it is, some months it isn't. I have no control over that. But I do know that banks will do that. They're doing it now. They did it there. They did it there. They did it there. They will do it all the time. It will always move in market structure because they have to profit take. I just need to wait for them to move it. If they're not moving it, there is no profit take. You can't take profit on something that hasn't moved into profit yet. So you just got to be patient. So mix your strategies. And this is partly why I'm trying to put this other material together. Just, there isn't just one way to make money out of this. I trade 2 different strategies. I did trade 3 different strategies last year, but again, I might introduce that stop loss based support resistance strategy again, but I'd rather do it as a hedging risk model than a stop loss risk model, because I think the hedging risk model has more chance of recovering those losses or losing less money. That's what it's all about, not losing much money. If you can reduce your losses, you will automatically make more money. If you try and make a strategy more profitable, you're struggling, aren't you? Because how do you make it more profitable? It's easy to make a strategy more profitable by removing loss. You should just analyze the loss and remove what makes it. You can't figure out what's going to make something more profitable because you don't know when something is going to move further or faster. And that is, in the end of the day, what makes you profit, isn't it? Good thing about hedging, I need to get more stuff. Yeah. Yeah, as Amy just said, you have to reduce your risk and be very patient. Yeah, as Amy just said that, if you only do 2 to 3% a month out of prop, that's fine. But I can't live on that. Very few people can live on that. So if you've got a 100K account and produce 2% a month, right? That's 2K. You're only taking 60 to 70% of that because the prop's taking 30 to 40, maybe 80, depending on what prop firm you're on. Yeah. So that is covering my mortgage. Yes, you could have 5 accounts over the line and all of them do that. But to get that, you've got to wait 3 to 6 months. There is a long-term way of making money out of prop. I accept. There probably is. I just don't know anyone that's doing it. Nobody in my group is doing it. I don't know anybody that's doing it. I've never seen a YouTuber do it. I've never seen anybody selling a course that does it. I don't believe anybody is making long-term consistent money out of prop. I believe a lot of people are gambling like I was and making a decent return out of it. But that's very high risk, very high stress, and requires a hell of a lot of capital up front. I was spending like 3 to 10K a month on prop evaluations. Was returning way more. But the outlay, if you think about it, if I hadn't have done that and I'd just put that money into my own funds, I would have been not making as much money. Well, probably would have been making as much money, but I'd allow the risk and the trades to play out more, make more money that way, wouldn't you? I don't know, swings and roundabouts, isn't it? You are paid to be patient, exactly. Impatience costs you money, yeah. This is where everybody goes wrong with trading. It is one of the biggest problems, fear of missing out. It's just like, you've missed that. And this is one of the things about the market reverse alerts indicator that is so good. If you miss that, you get a second bite of the cherry on the retest. So when you see this, you have a second opportunity to get in. Whether it works or not, you won't know. But if it does work, fantastic. If it doesn't work, manage it. But the solution for me personally for patience is, first of all, to have confidence in the strategy. And the only way you can do that is by back testing the crap out of it or demo trading it for at least a quarter to show yourself that it works. Then you will have faith in it and then you will just do it. Or to have multiple strategies running, which stops those itchy trigger fingers. Yeah. So if you've got a strategy which runs on the hourly chart that hasn't traded for 3 days, have something running on a lower time frame that those itchy trigger fingers and your little people in the back of your head that say, I need to make money, I need to trade, they need to be satisfied. You've got to satisfy them somehow. You can do that on a small time frame. Stock index hedge, opening range breakout, twice a day. This is why I love the hedging strategy, because you only trade once a day. You either do or you don't trade. And I'm in a trade, and that trade either has played out within 15, 20 minutes, half an hour, or I'm in the hedge for the day and it gives me something to concentrate and focus on. So I'm not sitting there going, I must find an opportunity somewhere. Got to stop that. That bit kills everybody. That's what the system hopping is, isn't it? I've got this strategy. It seems very good. It only takes 2 or 3 trades. I need another strategy. So you hop to something else, and then you find something on a lower time frame that seems to make money, and you forget about the one that you've just found that has the potential to make you a load of cash, because you want that one that does it faster. I was talking to my wife this morning about we're both on New Year's health kicks at the moment, and trying to lose weight. And the average human being, when they're on any kind of diet, will lose roughly 2 pounds a week. Yeah. So in a period of a month, you'll lose roughly half a stone, something like that. Yeah. But you want it to happen fast. I want my weight loss to be very, very quick. And it's I said to her, you sound like somebody in my live rooms that wants a Lamborghini. I've started trading. I've been doing it for 3 months. Where is my Lambo? It doesn't work that way. It's a long-term game. Yeah. You wait for the market to set up. You wait for the market to pay you. You can't force the market to give you a Lambo. It doesn't work that way. It's in control. You're not. You wait. You've got to be patient. And if you have a problem with patience, as I do, I need to be doing something all the time. You need multiple things to keep you occupied. So you find different things, different strategies. If this one hasn't got any on, my hedging strategy has. So I'll focus on this one today. How's this one doing? I'll watch this one because this has got loads going on. This one hasn't got much going on. This one has got nothing going on today. But yesterday, by the time we are now, I'd made $450. Today, I've made nothing. Swings and roundabouts. So if I'm not doing this, I'll focus on this. If there's nothing setting up because there's no RSI extensions, there's one ADR to look at, then I'll flip over and I'll do this. You just got to keep yourself occupied. Aussie, New Zealand. Extended to the downside. Coming down into this propulsion gap, which has already been tested once. So that's a breakout from that area. So we could be pushing down to come and test here, or we could bounce again out of here. This is all December though, so this is kind of done, isn't it? I don't know. But there's an ADR opportunity there. It's only just tapped ADR though. Look at that hideous reversal alert, how long that took to play out. You're just about to get the reversal alert in 1 minute 30. So that's about to trigger long. Not the greatest looking opportunity in the world, that one, is it? Really. The hardest thing, the hardest this I find for traders is to turn off after losses and wins. Yeah. This is an addiction, like you just said. It's like you are like a junkie, chart junkie. I'm always watching this. When I'm walking to the gym, I'm looking at charts on my phone. When I'm sitting downstairs, I've got my Microsoft Surface on the table next to me. with MT4 open. I'm sitting here all day. When I'm doing other stuff on this screen, the chart's over there. I'm never away from a chart because I'm always looking for opportunities and watching what's going on with price. I'm burning this into my retina over and over and over and over again. That's part of the job, is living this. It is something you live. You never turn off. But you're never actually doing anything, are you? Like we say, we're sitting here all the time right now waiting for something to happen. We've had an Aussie New Zealand. It's not a great setup. Nothing might set up today. And yet then we might have one of those days where all of a sudden this thing goes dying and everything lights up, in which case there's millions of opportunities and suddenly we take loads of risk. But we take risk when the market gives us the opportunity to take risk, not because we're sitting there twiddling our thumbs. It's the hard bit. Love H1M5, been doing great with it. My only quarrel is because it's mean reversion, you often take the other side of a strong fundamental shift. Yeah. Hedging will make it easier to handle initially, but you will still be in massive drawdown. You'll still be the wrong side. Yeah. The downside to hedging, every trade you are right. Every trade you are wrong. The downside to position trading, some trades you are wrong. Many trades you are never wrong. Position trading, every squeeze you get into in position trading, you will also be in it hedging. You're still going to be in those squeezes because you're going to be both directions. Yeah. When that one's right, that one's wrong. You got to deal with that. You still got to deal with this. It's still the same thing. You won't have any difference. Yeah. You will get into more positions depending how you trigger with a hedging strategy. But look at it right now. Yeah. I'm in everything. 1, 2, 3, 4, 5, 6, 7, 8. I'm only trading 8 pairs. I'm in 8 pairs. I'm hedged on 5 out of 8. Yeah. So I have got 5 problems. They're all problems. Every single one of these is a problem I have to fix. These have the potential to become problems or winners. They're either going to go there or they're going to become problems. Hedging is not an answer to not getting into squeezes. If this thing collapses down here, I'm still in it long, except I haven't got positions down here. My price is there. If I was position trading this, my average would be here. So I would only need that to get out. I need that to get out with a hedge. It's a break even. Big difference. It's a totally different strategy, but the principles are the same. We're not taking losses. We're waiting for the market to give us the direction. Then we're making money on the direction and dealing with the other. I know a great diet, major life-threatening surgery diet. I lost 50 pounds. That's always a good one. Yeah, my wife had gallbladder problem. She lost stones. She lost loads of weight because of the gallbladder problem. It's great. It's not great, but life-threatening surgery is even worse, obviously. But yeah, having a cold is the best thing you can do because it stops you eating, it stops you drinking, and immediately you start losing weight. But it's just nasty having it, isn't it? Best thing to do is to just eat healthy, exercise, and you will automatically lose. Calories in, calories out. It's a very simple. Again, people say to me it's really hard to lose weight. It's really easy. I have 400 calories in the morning. I have 400 calories at lunch. I have 1,200 calories in the evening. My calorie intake per day should be 2,800. I'm taking in 2,400, and I'm burning off 1,200 in spin classes. Math. Less going in than coming out. Weight goes down. It's really simple. I don't know why people make it so complicated. I think the problem again is this, isn't it? It's always the same, isn't it? Whenever you can't do something, it's that. Yeah. Why am I not losing weight? Because you had 2 chocolate biscuits with your coffee this morning. Yeah, but it's only 2 chocolate biscuits. Yeah, but it was 400 calories. That's half a spin class. Oh. It's really easy. You always know why it's not working. It's making it work, which is the hard bit, isn't it? I run a small account, M15M1, mean reversion. Yeah, that's a brilliant way to stop the itchy trigger fingers. Trade the 1 minute chart. And you probably make money out of it, don't you? But again, it's very, very, very hard on the psychology. Trading 1 minute charts is awful. I used to scalp tick charts, not even 1 minute. They weren't time-based charts. When I was trading futures, I traded tick charts. And the opportunities presented to you on tick charts and 1 minute charts are literally every 5 minutes something setting up somewhere. You've got to be really on the ball, and it's highly draining, which is why I don't scalp much anymore. I used to scalp a lot, and I used to love it, and I don't do it anymore because I just burn out. There's always a way to make money. If for some reason tomorrow I suddenly had to make 25 grand a month, I would be able to do it, but it would destroy me because it's like going to work for someone. You'd have to go and do the thing that you hate doing. And for me, it's scalping low time frames. I can do it, but it's horrible. Life, love, balance, basically. I have to say, you taught me to fight and make a trade work, not just to be another victim. 1 minute chart is a stroke in the making. Yeah. You look at it though. I mean, it's for anybody, everybody should be trading market structure and price action. Yeah. Candlestick patterns, charts, wicks. Yeah. Wicks don't lie, as the man on YouTube says. Yeah. They tell you that the bulls couldn't make it. So the bears took control. So the odds of that candle going down are the same, but the probability of that candle going down is slightly higher because the last time they tried, they couldn't. So if they couldn't try that time, it stands to reason that they probably might not be able to this time, so it might go down. Very logical. Yeah, big wick up, went down. Big wick up, went down. Yeah, big wick down, went down. See, 50-50. Yeah, big wick down, went up. Big wick down, didn't go anywhere. Yeah. So just because you see one of those doesn't mean it's going down. If it's push for an hour and you see one of those, good. If it's done that and you see one inside a range, useless. Yeah. Positioning of price action is more important than price action. So, but look at how many signals you get. Let's say you're trading bullish and bearish engulfings. Bearish engulfing. 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 I haven't seen a bullish engulfing yet. Do you reckon this market's bullish or bearish? Bearish engulfing. Yeah. Bull, bear. Might be slightly bullish. Massive bearish engulfing. Yeah. But look, this is like 1, 2, 3, 4. Measure it. That's 39 minutes. That's half an hour. I've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11-ish signals in 30 minutes. 11 times I've been told to do something. You come out onto the 5-minute chart during that period of time, which is, I don't know where I was, but somewhere around here. I've had one, and it worked. Got to the 15-minute time frame. You haven't even had a signal. It's just been going down, isn't it? But the accuracy on that time frame is incredibly small. Very, 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 very difficult to make work because you will get cut 1,000 times in half an hour. Whereas on higher time frames, you only get cut once. Maybe. Actually, you wouldn't even get cut. You'd just get in, wouldn't you? So, but you can make it work. And this is the problem I always had with people like ICT. Yeah. You never saw what time frame it was trading. Then it comes out, it's all 1 minute chart and this sort of stuff. Nobody makes money on 1 minute chart consistently. Banks and institutions and serious traders use hourly charts and above. They don't trade 1 minute charts. It's just not, you can't do it. Too many false signals. Algorithm. Why are you trying to lose weight? Just because I've put some on. That's all. It's always the same. Christmas. My problem is I have a birthday in November. So from November until New Year, I have me, another birthday, Christmas parties, New Year's parties. So basically, from my birthday, I probably have one weekend off of not eating, drinking, and doing stuff. So I tend to put on about 3/4 of a stone to a stone over the Christmas period. So January, I always lose it. But it's just the way it works. And I'd like to get down to what I was. I used to be my BMI, which was, I think it's 12.8 or something, which is it's too low. I looked gaunt. I look like a skeleton. It's weird. If you see anybody that is actually at their BMI, they always look unhealthy. I don't know why they give out that as a guidance because it's too small. But body mass index, for those that don't know. So yeah, I always go for about half a stone above my BMI. And for me at the moment, that's about 3/4 of a stone. So that's what I'm going to lose, which will take roughly 6 to 8 weeks because I know it's going to work at this level because I planned it. I'm not expecting to lose it faster. One day I found myself head out the window breathing heavy duty. No more 1 minute chart. Yeah, don't trade the 1 minute chart. How's your H1 Hedge MRA account doing? I don't know. Not trading anymore. It's not running. Shut it all down. It's only demo, so it wasn't trading. I don't know how it's doing. I don't know. Ask someone that's trading. I don't know if anybody's trading it in the Telegram group, but it was running for 10 months, wasn't it? And in that 10 months, it did. I can't remember what it was. 175% return. Huge. So yeah, it was killing it. Partly why I'm looking into a hedging strategy, but not using position trading because the obviously the market reverse alerts EA position trades hedges, which is why it went into so much drawdown. But then again, that's why it made so much money because it had large lot sizing on. So this is kind of a hybrid of it, if you like, what I'm developing. Hedging works. I've never had a problem with hedging in a strategy. People that hedge, I have no problem with, and I know you can make money out of it. It's a good strategy. However, it's incredibly complex. That's the difficulty for me in hedging is finding a way to do it that doesn't cause headaches. So that's where I find the issue, which is what I'm trying to automate. I've never looked at automating it from a portfolio perspective before. It's always been instrument by instrument, and it's just a pain in the backside. I wish you kept the H1 hedging going just for the laughs. Yeah, it's still on the. It's probably still got trades open, actually. It's not running. Let's have a look. See if I can't even remember if I shut the trades on it. Yeah, I must have shut the trades. Oh no, it hasn't logged in yet. Here we go. Woohoo! Just made 8.5% by turning it on. There you go. So it was. I hadn't turned it off. Basically, I just left it running. So it's just banked 8.5%, and we're sitting in 10.4% of drawdown. There's another $7,000 I can bank there. Look on the pound CAD. Another 3% to bank there, so it can do 10% today. This hasn't been running though, has it? It's just been sitting there. Yeah, but these are trades from last year. So that pound CAD look. Yeah, so that was that. That's the sell. The sell started here, scaling in. There's the profit take. Yeah. Oh, he's going to get that profit take move. The banks have got to get out of those positions before they rally them. So that could have. Look at that. So that's in profit now by 7K. What was it have been down there? Is it the pound CAD? Yeah, so it's in 7K of profit. So that probably would have been in, I don't know, 20, 25K or something. Because it's got quite a large lot size on it. It's 16 lots short. Look. Yeah. I'll leave it running for a bit again, but it's obviously not right because obviously I've opened it up today and it's suddenly closed out everything it could possibly close in profit. I've no idea what this would have been running on its own manually. So you can't tell, can you? You're never going to find out. Pound New Zealand's dropping. Right. I need to get on stuff. Has your wife interested or tried trading? No. Not interested at all. No. I have tried. My son has tried and done well because he knew nothing about trading. I taught him when he was 13. And I told him what to do. So I told him basically, wait until you get to a line. And then when you get a box, hit the button. And he made money. Brilliant. Because he had no preconceptions, no ideas. He just did what I told him to do and it worked. So it's really easy. It's like the golfer, isn't it? Yeah. If you've got somebody that's playing golf, been playing golf 15 years, and they've never had a lesson. Yeah. They will have a billion bad habits. You put them in front of a professional golf coach and he will teach them how to do it. It's very hard not to do what you've been doing for 15 years. Yeah. You give somebody that's never picked up a golf club before and you tell them exactly how to hold it, exactly how to position yourself, exactly where to look, exactly where to keep your eye, and you get them to swing, they will do it perfect because they've got no other preconceptions. If you've learned 50 strategies and they've all failed you, every time you take a new strategy on, you've got a comparison. It's very, very difficult to unpick your previous problems. So yeah, that's what I'd love to do. I would love to set up a business teaching people how to trade, but the only preconception is you have never looked at a chart ever in your life. If you've never looked at a chart ever in your life, come and join. If you've looked at a chart before or done any course before, you're not invited. You can't come. I would create a floor of people that would just make money because they would be taught from day one how this thing moves and they wouldn't have any idea of anything different. But everything you've been taught, everything I say, someone else has said the opposite. So you're torn. Do you listen to what I say or do you listen to what they said? Always. Everybody will always have something pre-programmed in their head, which is the opposite. You just fell out of a plane naked. Someone hands you a computer. What's your process to get started trading? Fell out of a plane naked. Why am I naked in the plane? Someone hands you a computer. What's your process to get started trading? I don't know. I would basically teach somebody that you only take a trade at a level of support and resistance. If you could just do that, you would make money. Yeah. You know, it's the simplest thing. Support and resistance. Yeah, that support is now resistance. I show it every day, and I have done for 2 years or 3 years in here. That is all you need. You won't have an interconnect connection, as Harold's just said. Yeah. So if you've fallen out of a plane and somebody's handed your computer, 1, how you're powering the computer. 2, how you're connecting to your broker. 3, you're naked. Probably more important thing, where's food and clothing coming from? Money? What do I need that for? I'm on a desert island. It's flawed, Franco. Your entire thing is flawed. It's not going to work. Yeah. I tell you what I would do. You pick up a computer. You've never seen a chart before in your life. What I would do is, this is what I would do. I would say, okay, you have 2 buttons. Okay. You can only press those 2 buttons. Yep. Every trade you take, the only thing you can do is press that button or that button. Yep. When price has moved in a direction that gives you a profit, you can press the close button. Yeah, you can click on your trade. Yeah, you can double click. The only 2 things you can do, you can press that button, or you can double click on your trade and you can press that button, the close button. They're the only 3 things you can do. What have I just stopped you doing? Can't use a stop loss, can you? You will make money. Yeah, you press the buy button, the sell button, and the close button. Those are the only 3 things you can do. You can't lose money. That's what I would teach someone. Should definitely keep that set file running for a few more months. Yeah, I can do. Can leave it running. I just shut it down to save processing power because I'm not using it. It's so tempting to run it. Run it. Some people are running that H1 hedging file. I haven't heard anything, so I assume that they are still running it and it's working. That account didn't blow and it didn't get anywhere near 50% of drawdown. So, and it made a fortune. I don't know what the P&L. It was a 100K account. And the current balance is 246. So it made 146K in 146% return in 10 months. Yes, brilliant. But you're going to live in your life is drawdown, isn't it? But that is it, isn't it? Your life is drawdown. Instead of the turtles, they would be the spinners. Yeah. Yeah, we could do spin class. So I could put every trader on a spin bike with a laptop in front of them. And you've just got to work out constantly the entire day with no break. And all you can do is every time you see it hit a line, you can press a button. Won't need an internet connection to trade yet. Create your own currency out of coconuts and start your own economy. Yep. I'm the only person there, though. So what am I going to do? Sell to myself? Would you like to buy a coconut today? Yes, please. £2.50. £2.70. £2.60. £2.65. All right. Done. You tell nothing going on in the markets, don't you? How do you manage your SIH trade when a hedge is triggered in order to close in profit? That's all covered in the course. Well, not in the course, in the video about the EA. So watch the SIH EA. There's 3 outcomes. So when you're hedging, you can either, if you've got a hedge on, you set a target to get out of the hedge in one direction. And then when you get out of that, you either wait for price to come down, you take an aggressive exit to come down, and you just close it, or you just close it out at the end of the day for whatever is left. Yeah. All covered in the video. I'm running M5 hedging at the moment. Yeah, M5 is very aggressive. personally, I prefer the H1 variation, but we will see. Right, I'm going to leave it there today because I've got nothing else to talk about. Nothing much is happening. So we're waiting basically for something to move. Aussie New Zealand's the only ADR today. There's no RSIs. Still sticking in drawdown. This is where I was on Thursday last week. So banks, 0.5%-ish. There's just nothing going on at the moment. So we just got to wait. US dollar yen, that is potentially going to make profit today. So that is back to break even. As you can see, it's exactly on my break even line. $24 in drawdown, which means that swap. So that's just cost of doing business. Looking for it to push down into ADR today and try and get out of that one. Rest of it's just sitting there waiting. So just waiting for something to happen, really. So I'll be working on my other strategy this morning, trying to get some more work done on that, and then I'll be back this afternoon. So I'll be back this afternoon, 2:20 for the New York session, and tomorrow morning, obviously, for Frankfurt. What was the maximum individual drawdown you saw for an individual pair? I don't know. Can't remember. 10% maybe? Can't remember what it was. I don't keep track of it. The whole purpose of that test, this test, the reason I launched this was to try and blow the account, and it didn't. And it accidentally returned 146%. Not accidentally, it returned. But this was a stress test. Every single pair with high risk to see if it would blow the account, and it didn't. It's just returned 146%. I don't think there's anything abnormal last year. I think it was just a normal trading year last year. They're not as normal as we have been since COVID. So if we get back to pre-COVID trading sort of volatility, it may get a little bit worse. The days when pound New Zealand was trading at 400 pips instead of 150 odd. So if volatility picks up, but then again, everything we do is based on ADR. So you'll only be scaling as percentages of volatility anyway. So I don't think it necessarily will make a difference, to be honest. So yeah. But I mean, you've got one, excuse me, we've got one at 2.6% there. I'm pretty sure I saw stuff in the 7s and 8s, individual currencies. So if you think about it, I mean, this is the beauty of hedging, isn't it? You're not going to get everything going to 7 or 8% of drawdown because you've got hedges on. Yeah. So they will be making profit. So it's just, all it's doing is every time you get a cycle in the opposite direction, it's just exiting the opposite side of the hedge and making the money on that one. It's got automatic drawdown control turned on. So what you did experience with this was big periods of negative numbers. So you'd have a negative. It would do loads of drawdown control to keep on top of that. That's why I did it, because I wanted to see if the drawdown control that you needed to do on the squeezes outweighed the profit it made on the hedges. And it did by a long shot. But I would put it, the best way to test this strategy, yeah, and it will be a long-winded thing, is to run it over the last year. So this test started April. I think the deposit was April. February. So we were trading in March. So March it started. It started trading in March. And I turned it off in December. So March, April, May, June, July, August, September, October, November, December. 10 months, yeah. So 146% return in 10 months. That is ever so slightly higher than I did with H1M5 last year. I did 125% last year on H1M5. So it's not, it is producing more money, but it's not as comfortable for me, Because if you think about it, it's trading very similar. It's waiting for H1 reversal alerts. So it's trading the same time frame, same movement, which is why it's returning a similar profit. But the thing to do is to backtest it, is to go put it on Aussie dollar Swiss, backtest it for 12 months, export those results. Yeah. Backtest it Aussie US for 12 months, export those results. Do the same for all the pairs. Yeah. Put them all those results, combine them and put them into strategy quant, into quant analyzer. And that will give you an equity curve, the proper equity curve that would have happened, how much drawdown would have happened, because obviously it's doing it over time. So you need to get all the results from individual tests, combine them and put them into quant analyze to see the equity curve. And then you'll see where it had its problems. And the problem, you won't be able to see the open drawdown. You won't be able to see this number here, but you will be able to see the drawdown control drawdown, because that is closed drawdown. So you'll see all the dips when the squeezes happened, because when a squeeze happens, automated drawdown control closes losses. So you'll be able to see where the dips are. And at those points, you will have had a larger open drawdown than the dip, but you won't know what that was. So, did you say you did 125% total last year? Yeah. Yeah. So similar to this, but this again, you know, this is what I'm saying about this course or this other sort of thing that I'm putting together. All the strategies I teach in the bootcamp work, all of them. But the key is to finding what works for you. What do you feel comfortable with? Amy is trading ADR reversals. Comfortable. I'm less comfortable with ADR reversals than I am with H1M5. Yet ADR reversals will give me twice as many entries. Yeah. Some months ADR reversals will be returning 25% when I'm returning 5%. Other months I'll be returning 25%. ADR reversals will be returning 10%, but I will have gone into 7% of drawdown. ADR reversals would have gone into 15% of drawdown. It's all swings and roundabouts. Everything works. Everything goes into drawdown. Everything makes profit because it's all the same strategy. It's mean reversion. It's bank movement, profit take. All of the strategies I teach revolve around the same concept, bank movement. The banks will always move, therefore these will always work. But which one do you click with? Which one are you comfortable with is what you need to focus on, because the profit is not down to you. Some months I make good, some months I don't. It's not down to me, it's down to the banks. So this is fantastic. If you like high risk, thrive on the adrenaline and want to make serious amounts of cash very quickly, but use most of your account for leverage. If that's you, this is for you. If it's not you, H1M5 or H4M5, H4M15 is better. But they all work. This was a stress test because I tested this strategy and I tested it over multiple pairs. And I was like, why is that not blowing the account? I want to test this. So I'm going to put the whole lot on there and test the whole lot at once. And it's done what it said in the back test. It hasn't blown the account. But next year, will it or won't it? I don't know. It's bloody dangerous, in my opinion. But risk comes with reward. You don't get the reward without the risk. This is why everybody's misconception of position trading is you don't use a stop loss, you add to losers. Everybody on the planet tells me not to add to a loser. Yeah. What do 95% of the population of traders do? Lose money. What don't they do? Add to losers. Maybe try the thing that they're not doing. Just throwing it out there. Yeah. What do the banks do? Scale into moves. I'm not doing anything clever. I'm just using market movement. Yeah, but I'm removing the bit that makes you lose money. This does the same as H1M5, H1M15, H1M5, ADR reversals, whatever. They all do the same thing. They just wait for the market to move. So it's the level of that that is the unknown. So next year, that could hit 80%. I've no idea because I don't know what's going to happen in the next 12 months. We could have another pandemic. Yeah. It's all risk. Every penny you put into your brokerage account is at risk of loss. Nothing you can do about that. So it's what you are comfortable trading. Yeah. And some people are trading this strategy. And, you know, I've said it many times. It's not for me, but it is working very, 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 very well. I should really set up trade explorers for these, but haven't. Just see what the margin level was. Yes, I mean, it's got 2,700% margin available. It's a 1 to 500 leverage, so it's never going to get there, is it? To a margin call. But that's the only other danger is if it ever got margin called, they would just shut the lot. That is, you would take the lot as a loss, which would wipe out most of your account, wouldn't it? So there is the danger of, we talked about earlier about black swans. A black swan event would blow that. Whereas with my risk profile on this, it would make a hell of a dent in my account as well, but it wouldn't blow it. That one I think would. What would your trading account size have to be for your broker to give you special treatment? Is there such a thing? What's special treatment? Doesn't matter what your account size is. You don't get treated any different, as far as I know. I don't know. I've traded with 6-figure accounts and not had any special treatment. At the end of the day, you go into a pot. Your broker's trading X million / billion of transactions. You are a pot. You're part of a pot. What percentage of that pot you make up, I don't think makes any difference. Orders have got to be executed. If you want special treatment, you'd need to set up your own brokerage, I reckon. I don't know. I don't think I've never had any special treatment that I know of. You're either on the A book or the B book. They both get executed the same. What you tend to find is the bigger your account, I find, what my experience is, the more profit you make, the less special treatment you get because they don't want you. Brokers make way more money out of losing traders than they do winning traders. If you're a winning trader, they only make spread, commission, and swap. If you're a losing trader, they make spread, commission, swap, and your account. So you don't get special treatment for being good. You get worse treatment. This is why I moved from Axie. I found my order execution at Axie got really bad as they turned me into a pro account because I was making too much money. Not making too much money, but making money. They weren't interested. I think it's the opposite. I don't know. I've never really looked into it. I tell all my friends, demo is great. What business allows you to lose millions before you get it right? Exactly, yeah. But also demos don't make you trade like it's real money. You don't trade a demo account the same way as you trade a real account. When there's real money on the line, you trade different. You're better off trading a small real account. In fact, I'd say you're better off not trading a small real account. You're better off trading a real account that would hurt you if you lost it. Because if it hurts you when you lose it, you'll make sure you don't lose it. You'll trade it properly. Had a chat with the IC markets about how they take the other side of clients' trades and the conflict of interest. They said they hedge their risk on the spot FX market. Yeah. They farm out your orders, basically. That's what swap is. Swap is the interest payment on the loan they take out for overnight holds on your FX positions. That's what a swap is. It's an interest payment. So, yeah, they take the opposite side of your trade and then they hedge it back out. So they can't lose. In some cases. In other cases, they will take the opposite side of your trade regardless. Depending on what your P&L is doing. If your P&L, right, how many times have you done this? I said I was going. I'm not going, am I? You've had an account with $1,000 in it or something, for example, right? You've tried a strategy out and it hasn't worked out. You're down to 800. Yeah. So you want to get that back. So you might take a little bit more risk, and that doesn't work out. So then it gets down to 600. Yeah. At that point, you're like, well, this isn't working. I'm 40% down. What are you going to do? You're going to switch strategy, or you're going to go, right, let's try and get this back. I've had a losing run. I'm due a winner. You double your risk. What do you think is going to happen? They know what's going to happen. What do? Take the other side of your trade. They don't hedge that out because they know that 600 is going to vanish into their account. Yeah. They've got software. Brokers, if you want to know about it, if you ever message Tom Hurgard about it, he used to work in a brokerage. They've got software which shows them everything about you as a profile, as a customer. Yeah. How many accounts you've had in the past, what your risk strategy is, where your stop losses are generally placed, how you're trading. It knows everything, and it will give you a grade. And that grade will tell you them what the percentage chances of you losing your money or winning. Yeah. That is how you get onto the A book or the B book. If you're on the B book, depending on which way they play it, the B book customers tend to be the ones who take the opposite sides of the trades on, then you will basically have them take the opposite side of your trade and not hedge it out because the profile says that you will lose the money. Yeah. If the profile changes and the profitability on you on the opposite side goes down, they will swap you back up to there until your profile drops back down to there, and then they will start to do that again. It's all for them. It's a numbers game. There's a massive volume of money going through the market. A percentage of it is dumb and is going to lose. That percentage is where they make their money. The rest of it, they just make a commission for executing the orders. It's the best business in the world. People put money in. 74% of them never take it out. It's like a bank, but everybody dies and leaves their money in it. That's what brokerages are. And that money just goes back in, and then 50% of it gets taken out into marketing because the dead people have got to be replaced with live people. That goes in the C book. Maybe there is a C book. It's just a down. You're the worst of the worst in the B book, basically. If you're, I don't know. But that's how it works. That's the business model. Yeah, that's why it's on. This is why it's up here. 67.3% of people that deposit in there never get it back out again. If you had somebody coming to you and saying, here's 10,000, and you know that 6,730 of that is staying put, what are you going to do? Use that money. Take it. It's yours. It's a statistical fact. And the software is more intelligent. The software even tells them where to spread the market. It tells them, if you spread the market by 10 pips, you will make 3,000. If you spread the market by 8 pips, you will make 2,700. If you spread the market by 6 pips, you will make 2,400. There is a news event coming. What would you like to do? I'll spread it by that, please, because that's what's going to make me the most money. Spread news back to where we started. Thank you very much. That's how their software works. It's literally a grid like that with monetary figures over here, and price is trading here. Where would you like to spread? Their software visibly looks like that. I've seen it. They have buttons here to execute and steal your money. And worst thing is, you have signed a contract that tells you they are doing it. It says in your contract with your broker, you will execute my order for me at the best price possible that you can achieve. Right now, that's the best price I can achieve. And if you phone up and go, why the hell did you execute that order? It never traded there. They'll say that was where the spread went. Why did the spread go there? Because you asked us to execute your order for you at the best price possible. That's the only one we could get. Prove me wrong. Never, ever assume that your broker is on your side or you're going to get special treatment. Their job is to take as much of your bank balance as they possibly can. And they do. Spread, swap commission is just the tip of the iceberg. That's what we see. Honestly, I lost 2,500 in 6 years until you started winning. That's good. I lost way more than that. Way more than that. You can't. No, there's no. I don't think I know any profitable traders that have not lost money. I don't know. No one's come into this and not lost money. You can't. You have to lose money to realize that you can't make money. It's part of the process. You have to lose money. Part of your education in trading is blowing accounts. Until you've blown 3 or 4 accounts, you don't really get it. You assume you can make this work, but until you've blown 3 or 4 accounts, then you either do one of 2 things: you give up, or you go, right, okay, that's not how you do this. Let's look into it further before I start another account. Then you go back to demo. I spent ages on demo when I came back to FX. I took years out of FX, and when I came back, I demo traded because I'd lost money blowing accounts. And I knew that if I went straight in with money again, I'd blow it. So I demoed it. And then I consistently made money, and I proved to myself that I got it. Then I went live, small. Then I grew that account. And then I went, this is working. And I added to the account. Then I added to the account again. And then I got it to a point where I could pay for stuff with the withdrawals. And that was it. But it cost me, my education in trading is 6 figures. No, it's not 6 figures. That's not true. It's high 5 figures. Trading courses, EAs, trading courses, EAs, trading courses, EAs, indicators, trading courses, EAs, indicators, 5 blown accounts, trading courses, indicators, EAs. Hang on a minute. I haven't lost money for 3 months. That's the point. That's the turning point. Break even. If you can go break even for a quarter, you've cracked it, because there's only one way to go from that. But you've got to get there. And the only way to get there is to blow your money. You've got to lose it. You've got to lose it. Because that teaches you the lessons that you lose money if you do that. So you don't do that again. You lose money if you do that. You don't do that again. You lose money if you do that. Eventually, you'll run out of things that lose you money, and you'll start to make money because you know everything that doesn't work. And usually it involves a stop loss. Right, I'm going now. Bye. The 66 of you in here still. Well done for staying this long. 10 o'clock, I'll be back at 2:20 for the New York session. University of Stop Loss, yes. I'll be back at 2:20 for the New York session. Back tomorrow morning for Frankfurt as usual, 7:50. Hopefully it moves. If we come back this afternoon, I pretty much guarantee we'll still be sitting there. So I don't think anything's going to happen today. Indices did go bearish, but there's not a lot of movement going on, is there really? So we'll wait and see what happens this afternoon. There's no news. We haven't got to worry about news. Today, there is nothing. The Aussie news didn't happen. That one didn't happen. There was no overnight news of any impact whatsoever. So I didn't cover that this morning because there wasn't anything. So yeah, wait and see what happens. We're waiting for some news to kick in and move the market. All right. So have a good day. Anything you need, let me know. I'll be in Telegram. Other than that, I'll be back this afternoon, and I will see you in the next one. Have a good one.